let's get on board Rajesh Palvia, who's the head technical and derivative research at Axis Securities. Hi, thank you so much. And we also have another guest, Mayuresh Joshi, who's the head equity, markets, joining us right now. Hi, good afternoon to both of you. Thank you so much for joining us. First up, I'll come to you, Rajesh, for a tech check. In fact, Nifty snapped its 3-week losing streak. We managed to close above the 22,500 levels. Is it time for a reversal, and what are the levels that you're working with?
Good afternoon. So there is a recovery from oversold trajectory of Nifty, but still we are trading below to 20-day moving average, which is placed at around 22,750 kind of level. So that level needs to cross in this recovery. If Nifty manages to cross 22,750, then we may see some short covering action, substantial short covering action, and then possible extension of rally could be there towards 22,900, even 23,000 level. But at this juncture, till Nifty is holding above 22,400, trend is likely to exhibit on the bullish side, as broader market has also started performing. We have seen buying interest in mid cap as well as in the small cap space also, and a lot of sector which were in oversold trajectory have started recovering from their oversold trajectory. So I think 22,400 needs to keep as a stop loss, and maybe in the coming week Nifty attempt to move towards 22,750. That's the first target where we are projecting, and if at all it's crosses, then next target would be 22,900. For Bank Nifty, still struggling to cross 48,600, 650 zone. That's the immediate supply zone for the Bank Nifty. Until the Bank Nifty not crosses above 48,650, we may see some consolidation in range of 48,200 to 48,650. Either side breakout will decide the major direction, but looking at the near-term structure, we do expect that Bank Nifty may also attempt to give breakout about 48,650, and then possible target towards 48,900 we may see in the coming week.
Well, then that's a take coming in. As far as the market setup is concerned, Mayuresh, I'll take it across to you because I really wanted to know about your take coming in as far as the Nifty Metal Index is concerned, because we've seen that index really shining all through this week. What do you make of this sort of momentum? Do you think it's likely to build on this momentum that we've seen throughout this week?
Good afternoon to you. So I think two things. One, I think the dollar index has come off, and I think that's a very obvious sign for metals to react the way they have reacted as far as the move is concerned. The second element is also expectations in some element of a safeguard duty coming through. There have been large elements of dumping that have been reported, specifically from Chinese exporters as far as HRC steel, CRC steel is concerned. And therefore, I think the prices at which these products are getting dumped are significantly lower than the market price. And you've obviously seen some element of HRC, CRC prices in terms of realizations come off over the last few weeks and the last few months as well, which does not augur well in terms of operating leverage, because even if volumes probably hold up on the domestic front, because LME prices are lower and because these prices are getting dumped at a lower level as well, that's going to be a huge indicator in terms of how elements can probably move. The second element is also in terms of Trump tariff itself. And if tariffs are increased and there is no scope for steel which is produced globally to probably move to the US, just as a base case scenario, that will start moving to other markets as well. And obviously the base case scenario that gets worked out, the demand still probably looks weak. Obviously, the factors in favor for both ferrous as well as non-ferrous stocks is that inventory levels across the globe are at very, very abysmal levels. And therefore, I think as global recovery starts getting pegged in, as we head into the first or the second half of the next financial year, and as restocking takes place, the hope in terms of LME prices actually starting to improve might start creating leverage in terms of balance sheet. There is also one more perspective in terms of green steel as an example, that a lot of European standards are getting adhered to. And therefore, a lot of companies will also have to tweak their production processes to probably ensure that the inputs that they're probably using are adhering to green steel manufacturing. that might entail costs as well. So I think there are a lot of ifs and buts, and therefore this sector might go through a consolidation phase. Obviously, I think if safeguard duties are announced in the Indian context, you might see a sentimental push through happening as far as prices are concerned. But to a large extent, I think the demand-supply dynamics, the core macro headwinds, might actually curtail significant gains and re-rating for the sector as well.
Mayuresh, I'll come to you then Rajesh and then Mayuresh. This question is for the both of you. I'll first get a technical view on that. Rajesh, I want to talk to you about the broader markets. Now, let's face it, the broader markets, the small and mid caps are down anywhere between 20 to 20 odd percent. There was a lot of froth there, and this is like after the bloodbath that we saw in the broader markets. Finally, this week we have a bit of a breather that's come in. Small caps are up 5% this week. Mid caps are also up 2 odd percent this week. Really, is this a time for a reversal for mid caps and small caps? That's my question to you, Rajesh. For Mayuresh, is the froth really over? Is it time for us to start looking at good bets in the small cap and the mid cap space now? First up, Rajesh, you go.
So still looking at the kind of correction which we have seen in Nifty mid cap index as well as in the Nifty small cap, it's again some recovery is taken place from the oversold trajectory, but still the major FI supply is in the large cap space. So as Nifty has shown some recovery, so we have seen the recovery, the same kind of recovery in the Nifty mid cap as well as in the small cap space also. But still, both the indices are trading below their 220-day moving average. So I think that's the immediate hurdle for the Nifty mid cap as well as for the Nifty small cap also. But yes, we have seen Nifty small cap has done well, one notch better compared to the Nifty mid cap. And we believe if Nifty holds above 22,400 level, so I think some more recovery we may witness in the small cap as well as in the mid cap space. A lot of sectors have shown recovery. So I think there could be a chance that we may see some more recovery in the mid cap and small cap space in the coming week. But one needs to be cautious as till Nifty is holding about 22,400, they can try to buy some stocks where the already oversold trajectory is already there. So there they may get some chance to pull back in those stocks. So there would be some opportunity on the trading side. But again, still structure is weak for Nifty mid cap as well as for the small cap.
Coming to you now, do you concur? Still a lot of pain left as far as mid cap and small cap is concerned. We're not out of the woods yet.
So they are clearly overrated. And obviously, I think if you see the exponential returns that largely this space has delivered over the last 2.5, 3 years, a large part of the universe, the returns have been 3x, 4x, in some cases 7x, 8x as well. And therefore, I think the price moves have probably gestated earnings growth, which probably have started disappointing for a large part of the universe as well. And therefore, I think the re-rating which had happened in a significant fashion is now getting de-rated, and therefore the stocks are correcting, adjusting for the earnings mix that will come through over the next couple of years. And as these earnings readjustments happens to forward ratios, you might see further corrections that happen selectively within these spaces as well. And therefore, I think the entire premise here is that you need to be very, very specific when you're probably talking about the broader markets, spaces which are expected to hold up as far as earnings is concerned, and where valuations and bases, as we see it in markets with India, are still reasonably placed. I think those spaces are where I think the pockets of strength might lie. And therefore, I think the answer to your question is that to counter how the space might do, whether it's the mid cap or the small cap, I think it's going to be very, very selective, and it's going to be a stock pickers year as far as the broader markets are concerned.
Then it's going to be a stock pickers year. That's the take coming in as far as Mayuresh is concerned. And speaking of stocks, then Rajesh, which are your top recommendations when it comes to stocks?
Stocks ideas, both are on the long side. First one is SRF from the chemical space. Very stable structure in this kind of volatile market. This is the third consecutive week where stock is showing strength. And in today's session also, we have seen that stock managed to view breakout of its narrow price range consolidation of last 4-5 trading session. So looking at the strength in today's session, we believe that this momentum can extend further and possible targets towards 3025 we may see in the coming days. So SRF can be looked at for buy with stop loss of 2885. Another stock is from the defense space, that is Bharat Dynamics BDL. Very strong really throughout the week for the stock. Looking at the near-term, short-term structure, now stock managed to cross its 20-day as well as it's negotiating with its 50-day moving average.
All right, SRF and Bharat Dynamics are your picks. But on that note, we're completely timed out on this edition of Your Trades. Rajesh, Mayuresh, thank you so much for taking the time out and joining us this afternoon.